Welcome to the deep dive. Today we're really getting into Wonderla Holidays Ltd, the big amusement park and resort operator here in India.
That's right.
We've got their latest numbers, the FY25 Q4 and full year results presentation, plus their annual report.
Yeah, quite a bit of material to work through.
Our mission really is to unpack all of this, see what it tells us about how they've been doing recently, what their strategy looks like, and maybe what's next for them.
And Wonderla, they've been around a while, adding that wonder, as they say, since the first park opened back in Kochi, 2000?
Yeah, 2 decades plus.
And they've served, get this, over 40 million visitors across Kochi, Bengaluru, Hyderabad, and now the new one in Bhubaneswar just started.
Right, Bhubaneswar just came online. And don't forget the resort in Bengaluru. That 3-star resort attached to the park there adds a different flavor to their business.
Definitely. So shall we dive into the numbers, the financials?
Let's do it. Okay, Q4 and full year FY25. Starting with revenue from operations. Looks like a slight dip in Q4.
It came in at 9,678.2 lakhs. Compare that to Q4 last year, 9,968.6 lakhs. So yeah, down about, 2.9%?
Okay, and the full year?
Similar trend, actually. 45,857.1 lakhs for FY25. That's down 5.1% from the previous year's 48,304.4 lakhs. So yeah, a bit of a pullback on the main revenue stream.
Okay, revenue's down slightly. But what about other income? I saw something interesting there.
Oh, yeah, definitely. That was a bright spot, relatively speaking. Q4 FY25, other income jumped significantly, almost doubled, really, 1,080.6 lakhs compared to just 514.6 lakhs in Q4 FY24.
Wow, quite a leap. And for the full year?
Also, not quite doubling, but still a decent increase, 2,421.0 lakhs for FY25 versus 2,298.4 lakhs in FY24.
So that definitely helped buffer the main revenue dip.
It certainly cushioned it. It makes you wonder exactly what's driving that. Maybe investment income or perhaps selling off some assets. Worth keeping an eye on where that's coming from long term.
Good point. So factoring that in, the total income picture, Q4 FY25 actually edged up slightly. Right.
Correct. It hit 10,758.9 lakhs. That's up 2.6% from Q4 FY24's offer 10,483.1 lakhs. So a small increase there for the quarter.
But the full year total income still down.
Yes, for the full year, it dipped by 4.6%, landed at 100,278.1 lakhs compared to 50,602.8 lakhs the year before.
Okay, now let's talk profitability, because that's where things seem to shift more noticeably. EBITDA.
Yeah, absolutely. The EBITDA figures, they tell a, tougher story. Q4 FY25 EBITDA was 3,054.2 lakhs.
Which is down quite a bit from last year.
Down significantly, a 24.7% drop from the 4,057.1 lakhs in Q4 FY24.
And the full year.
Even steeper decline there. Full year FY25 EBITDA came in at 17,140.1 lakhs. That's a big drop, 31.5% lower than the 25,016.8 lakhs they posted in FY24.
Precisely. That's your core operating profit before the interest, taxes, depreciation. That's just a real squeeze on operations.
Yeah, precisely. It points to tighter margins on their core business activities during that period.
And does this line up with visitor numbers? Footfall.
It does seem to. Footfall took a hit, especially in Q4. They had 1,101,000 visitors in Q4 FY25.
Compared to
2,261,000 in Q4 FY24. That's a massive drop, over 50% down for the quarter.
Wow. Any idea why such a big quarterly drop?
It's hard to say just from these numbers. Could be anything, whether maybe local exam schedule shifted, competition, lots of possibilities.
Yeah, for the full year, footfall was also down.
Yes, but less dramatically than Q4. Full year FY25 saw 3,049,000 visitors. That's down about 6% from the 3,252,000 they had in FY24. So fewer people coming through the gates overall for the year.
Okay, so fewer visitors. But didn't I see something about them making more money per visitor? ARPU?
Yeah, that's the counterpoint. Right, average revenue per user, or ARPU, actually went up.
How much?
In Q4 FY25, ARPU was 678. Now that's up from 709 in Q4 FY24. Wait, let me check that again. Oh, sorry, my mistake there. ARPU in Q4 FY25 was 678, which is actually down from 709 in Q4 FY24. A 4% decrease for the quarter.
Okay, so ARPU down in Q4. That makes more sense with the lower footfall and EBITDA?
Yes, apologies, got that crossed. But for the full year FY25, ARPU was 1,449, which is a slight increase, about 1%, from 101,430 in FY24.
Ah, okay. So full year ARPU slightly up, but Q4 ARPU was down. Interesting mix. So overall for the year, each visitor spent just a tiny bit more on average.
Exactly. Perhaps more spending on food, merchandise, maybe specific ride tickets. Even with fewer people, they managed to slightly increase the average spend over the whole year.
That's a tricky balance. Fewer visitors, but trying to get more from each one. What about the bottom line then? Profit after tax, PIT, and I mentioned cash pat too.
Yeah, both Pat and CashPat mirrored that EBITDA trend. They saw decreases in Q4 and for the full year FY25.
So profitability definitely took a hit across the board.
It seems so. The reports didn't emphasize the exact percentages as much, but it follows logically from the lower revenue and, more significantly, the lower EBITDA. CashPat, remember, just adjusts for non-cash stuff like depreciation, giving a sense of actual cash generated, both being down points to reduce profitability and cash flow from operations.
Right. And the margins, EBITDA margin, pad margin. Must have tightened then.
Almost certainly, yes, reflecting that pressure on profitability we've been discussing.
Okay. Let's shift gears a bit. What about the Wonderla Resort in Bengaluru? How did that specific part of the business fare?
The resort, well, it also saw its total revenue dip. In Q4 FY25, revenue was 382 lakhs.
Down
5% from 402 lakhs in Q4 last year. And the full year FY25 showed a similar pattern, 1,688 lakhs total revenue, which is down 6% compared to the 1,795 lakhs in FY24.
So the resort wasn't immune to the overall trend?
No, it seems not.
But I thought I saw something positive there. Average room rental.
AR.
Yeah, yes. That's the other side of the coin for the resort. The AR actually increased.
It did. By how much?
Quite nicely, especially in Q4. It went up to 5,987 from 5,403 in Q4 FY24. That's an 11% jump.
Okay, 11% increase in Q4 room rates. And the full year?
Full year FY25, the AR was 5,817, still up, but a more modest 2% increase from 5,728 in FY24. So they were definitely commanding higher prices per room, on average. Interesting. Higher room rates. But did that mean fewer people staying? Occupancy?
That seems to be the trade-off, yes. Occupancy rates went down. In Q4 FY25, occupancy was only 44%. Down from 52% in Q4 FY24. And for the full year FY25, occupancy averaged 49%, which is also a drop from the 55% they had in FY24.
So higher prices, but fewer rooms filled. It makes you wonder if that was a conscious strategy, aiming for higher yield per occupied room, or if demand just softened at those higher prices.
Exactly. It's a classic occupancy versus rate question.
Okay, let's pivot to the balance sheet now. Comparing March 2025 to March 2024. Looks like some big shifts there.
Oh, definitely. Big movements. Let's start with total non-current assets. They grew substantially.
How much?
Went up from about 98,876 lakhs to roughly 1,024,680 lakhs. A pretty big jump.
And what's driving that? Mostly property and equipment.
That's a huge part of it, yeah. Property, plant, and equipment, or PP&E, increased from around 74,722 lakhs to 94,331 lakhs. Plus, capital work in progress, that's stuff under construction, also rose.
Okay, capital work in progress.
Yeah, that went from about 17,079 lakhs to 22,548 lakhs. So clearly they're investing heavily. Think infrastructure, ongoing projects. The new Chennai park likely features heavily in that CWIP number.
Right, the Chennai project makes sense. And what about current assets? I heard those jump too.
Jumped is an understatement. Total current assets more than doubled. Went from roughly 24,955 lakhs to 61,480 lakhs.
Wow. What caused such a huge increase there?
Two main things stand out. Financial assets, specifically investments, grew from about 9,014 lakhs to 13,596 lakhs. But the really big one was cash and cash equivalents and other bank balances.
How big?
That leaped from around 12,387 lakhs to a massive 42,291 lakhs.
Okay, that's a lot more cash on hand. Gives them a lot of flexibility, I suppose.
Absolutely. Significant increase in liquidity. Good for future plans, weathering storms, you name it.
So pulling it all together, total assets overall saw some serious growth then.
For sure. Total assets reached 1,086,160 lakhs at the end of FY25, up from 1,023,831 lakhs the year before. Significant expansion of the asset base.
And how was this financed? Looking at the equity and liabilities side?
Well, equity share capital saw a bit of an increase, from 5,657 lakhs to 6,341 lakhs. But the major growth was in other equity.
Other equity. How much did that grow?
That shot up considerably, from 1,003,803 lakhs to 1,066,028 lakhs. big increase there.
So a lot of the asset growth seems supported by a stronger equity base.
Exactly. And reflecting that, total equity and liabilities grew in line with assets, moving from roughly 1,009,460 lakhs to 1,072,369 lakhs. So the balance sheet overall looks like it's strengthened considerably in terms of scale and equity position, despite the operating profit dip.
Okay, that paints a clearer picture of the financial health. Now let's talk future. Strategy. Where is Wonderla trying to go with all this?
Well, their core vision, adding wonder, bringing people together, that remains central. And the mission is about building and running these amusement spaces efficiently. But the growth strategy seems multi-pronged.
Like expanding with new parks. Chennai is the big one, right?
Chennai is definitely key. Construction is ongoing. And remember, they got that local body tax exemption for 10 years back in 2023. That's a nice plus for a new park.
That helps. Are they looking elsewhere too?
They say they're actively exploring opportunities in other strategic locations. So yeah, expansion seems high on the agenda, which, given the recent footfall numbers, tapping into new markets like Chennai could be really important for growth.
Makes sense. But it's not just about new locations, is it? What about the parks they already have?
No, you're right. They're also focused on enhancing the existing parks, makeovers, keeping things fresh, and introducing new attractions.
And the resorts? Are they planning more of those?
That seems to be a big part of the plan. Replicating that Bengaluru model, integrating a resort with the park. They want to do that at their other locations eventually. Create a more complete destination experience.
That could definitely help occupancy and maybe even park visits at package, right?
Potentially, yes. And linking back to ARPU, these enhancements and new rides, based on customer research, they say, could encourage people to spend more while they're there.
And how are they planning to bring in more revenue generally?
They talk about offering more value-added services on the entry tickets, maybe like fast passes or bundles, and also really leveraging digital platforms, social media for marketing and engagement. Trying to boost that per visitor spend seems critical, especially if footfall remains a challenge.
So it sounds like they have a plan. What are their core strengths they're relying on to pull this off?
Well, they have several going for them. Brand recognition is huge. 40 million visitors is nothing to sneeze at.
True.
Then there's their in-house capability to design and make rides. That's quite unique, gives them control over cost and innovation.
I didn't realize they made their own rides.
Yeah, a significant portion. Plus, the locations of their current parks are generally seen as strategic. They also emphasize, careful financial management, prudent capital allocation, and an experienced leadership team. Folks like Arun Chidilapalli, the MD, and Saji Louise, the CFO.
And they mentioned awards too, hygiene and stuff.
Right, things like hygiene ratings, the Eat Right Campuses certification for the Korda Park, which is Bhubaneswar. That focus on safety and quality is definitely part of their brand proposition. All these strengths, presumably, help them navigate FY25 and are what they're banking on for the future.
Okay. And just to confirm on Chennai, it's definitely under construction now.
Yes, the reports confirm it's actively in the construction phase. You can see that investment reflected in the increased capital work in progress we talked about on the balance sheet.
Got it. So big project moving forward.
Definitely one to watch. That tax exemption helps, but launching a major new park is always a big undertaking.
Okay, so let's try and wrap this up. Summing up FY25 for Wonderla, it feels like, well, a mixed picture.
I think that's fair. You saw revenue dip slightly, and EBITDA took a more significant hit. Footfall was down overall, particularly in Q4. But, on the other hand, the balance sheet looks much larger and stronger. Assets grew significantly, equity base expanded, and they're sitting on a lot more cash.
And the resort managed higher room rates, even if occupancy slipped. ARPU for the year was slightly up too.
Exactly. And all this is happening while they're clearly investing heavily in the future at Chennai Park, upgrading existing ones, planning more resorts.
So it really sets up an interesting question looking forward, doesn't it?
It does. As Wonderla pushes ahead with this expansion, focusing on these integrated experiences, new rides, how is all this going to play out financially? Can they consistently deliver that wonder and, importantly, the returns, especially in what's likely a competitive entertainment market?
Right. Which leads to maybe a final thought for you listening.
Yeah, what do you think? Beyond the plans we've heard, the new parks, the resorts, what other paths could Wonderla explore? What innovative strategies might they use to really cement their position, maybe even grow faster, attract more people, and keep enhancing that one factor in the years ahead? Are there untapped opportunities out there for them?